Hello and welcome to First Filing. Let's understand what is ITR-1 in a simple way. अगर आपकी total income is less than 50 lakhs and the total income consists of salary, one house property, family pension, agricultural income which is less than 5,000, income of a spouse and minor, and other incomes like interest and dividend, and with one condition that you should be an ordinary resident of India. Then आपको फाइल करनी होगी ITR-1. Let's see who cannot file ITR-1: NRI or non-ordinary resident of India, a company director, any person with business or professional income, capital gains income, income from lottery, income from more than one house property, holding unlisted shares of a company, or foreign income. Okay, but what are the documents required for filing ITR-1? The required documents are: number 1, Form 16, which contains salary details; number 2, Form 26AS, which contains TDS and advanced tax records; number 3, Annual Information Certificate and Taxpayer Information Summary, which summarizes financial transaction; number 4, Aadhaar and PAN card; number 5, your bank statements; number 6, home loan interest certificate and rent receipts for HRA purpose. Wait, are there any deductions which will help me save my tax? Yes, there are deductions which will help an individual to save tax on the total taxable income, which includes Section 80C for investments like LIC, NSC, FD, and PPF, on which an individual can save maximum up to 1,50,000. Section 80D for medical insurance and health expenses, maximum of 1 lakh based on age. Section 80 TTA for saving bank interest deductions, not applicable for FD, RD or bonds, maximum up to 10,000. But for senior citizens, Section 80 TTB with maximum deductions of 50,000, which is applicable on all types of interest income. Now, let's understand what is the tax structure of ITR-1 in old and new tax regimes. Compared to old tax regimes, new tax regime does not allow deduction on total income but ensure lower tax rates. You can see the image on the screen which shows the tax structure of the old as well as the new tax regime. So, if your deductions like ATC, ATD, HRA exceeds rupees 2.5 lakhs, choose old regime. Otherwise, the new regime is likely to be better. Let's take an example where Mr. A has the following income and deduction. You can see that his gross salary is rupees 10 lakhs and the list of deductions as well. Now, in step 1, you can see the calculation of taxable income in old and new regime. Now, in step 2, you can see the applied old and new tax slabs. We can conclude that since Mr. A has deductions of rupees 1,85,000, the old regime is better as it results in less tax. If Mr. A had fewer deductions, the new regime might have been better. Kindly follow First Filing for such insightful information. Thank you.